The stock market rallied the last couple of days, and then it started to crash, crash, crash. So basically, this week we saw the stock market down for 3 consecutive days, essentially, and then it rallied this Friday a little bit. So a lot of people are concerned because one, we see a lot of tech layoffs because they overpredicted growth. They overpredicted a lot of things. And now with the higher interest rates and less demand for certain positions due to the fact that they need to cut costs to mitigate losses, we're seeing less people who are probably going to be able to invest in the stock market and focus more on just survival, right? So we're going to see a decrease in savings. We're going to see a decrease in raises, and we're also going to see a decrease in contributions into the stock market. And that's going to be all of 2024. That much, I think we all understand. But are we going to see a stock market crash in the short term? Or are we going to ride this thing out and we're going to see a lot more growth and expansion? For me, I'm of the mindset that a lot of more companies are now at risk. A lot more companies are not going to be able to foot a increased bill where their rates are fluctuating and they weren't able to lock in a lower rate and a lower percentage, right? So those companies are going to struggle a lot more. You're going to see more layoffs from Google, more layoffs from Apple, more layoffs from all subscription sectors. So we already saw it with Disney laying off plenty of people at ESPN. We're going to see it in more places like Netflix as well, Hulu, which was bought out. And so again, we're going to see a lot more companies getting thinner, expecting more productivity. We heard that Google is expecting each person at their company to now produce at a 20% higher clip. And so that's what we need to see. We need to see more lean, green, and profitable companies. But the companies that don't have to get as lean can still produce and show profit is where I'm really focused on. So I don't want a razor thin company that's getting by because they've reduced their staff completely. No, I want a company that can afford a little bit of increased labor. So if they do need to decrease, that's still an option. But at the same time, they're so profitable that they're able to keep, train, and develop those from within. Those are the type of companies that are even more showing more promise in this type of market. Now, the question that you might ask is, what is those companies, or what companies are you leaning towards? Well, there are some surefire companies that we all know and trust and that we know are going to stick through any recession and make it out. Although McDonald's was in the news for certain messes in regards to war, I understand that McDonald's is the type of company that can hire extra people, that can support additional development and growth and training. And if they did need to get leaner, they can do that as well. They can work on their prices. They can promote cheaper meal options. They can do so much more. And so that's a company that I'm looking at in this time of year to say, okay, McDonald's is a company that is going to drive more sales, is going to still be producing profitable and effective in this market as well, right? And that's just one company off the top of my head that I do own in my portfolio that I can look at and say, okay, this meets the criteria that I like to see in terms of a sturdy company that can weather any storm, that will give me dividends, and that will see growth as well, right? Because I'm a dividend growth investor. That's the type of stuff that I want to see. And I also believe that the overall stock market as a whole is going to be profitable. So the S&P 500 ETF, the VOO ETF, those are ETFs that I can look towards and say, okay, we're going to do well. So what I always like to say is, first off, like the video, subscribe to the channel. 80% of people do not like or subscribe to the channel, and that is detrimental to the growth of the channel and also the hard work that I took upon myself to gather this knowledge, gather the education in order to speak to you today. But another thing that I wanted to touch on is that I do the opposite of what most people do, but I also understand the history in order to invest properly. So what does that mean? If most people are in student loan debt, college credit card debt, the average person has $6,000 in credit card debt, right? I don't want to be average. So we're going to focus on being different. We're going to focus on being above average, at least financially, which will allow us to invest, which will allow us to save, which will allow us to not have the same hardships as other people, right? So that's the first thing you want to focus on, is not doing what everyone else does. If everybody else is pulling money out of the stock market, that's when I want to invest, because it's all discounted. It's a discounted rate. If half of the people just pulled out of McDonald's, that means half of the world knows about McDonald's. I need to know why they pulled out of McDonald's. Was it a serious reason or was it not? If it's not a serious reason, like, okay, it was a war that's going to pass, people, it's fickle. Half of those buyers are going to go back and start eating McDonald's again. Cool. Let me invest more into this company, because a lot of these people don't know where to put their money, and they're going to put it right back into that system. And McDonald's is in the S&P 500. So even if they say I'm not investing in McDonald's directly, but I'm going to invest in the S&P 500, that's also going to increase the value of said McDonald's. So again, it's just understanding what's going on with the companies that you want to invest in. And I always say, invest in the things that you like, that you own, and that you would use. Every time I buy a real estate property, I always eat breakfast at McDonald's right before the closing. I tend to not go to McDonald's for anything else outside of that. I guess it's my victory meal, which is funny because I actually don't recommend it most times, but it is a producer in my portfolio. Is great, and it just so happens to always be next to the places that I'm going to sign for closing documents. I always happen to be hungry, and I always happen to go to McDonald's for that breakfast. Is I don't know what it is, but McDonald's happens to be my victory meal every time I close on a property for some reason. Not to shift off topics, but again, I always look at late December, because that after Christmas, people were pulling money out of the stock market to pay bills. But right when we get into January, I think all of the crashing, all of the gouging of the stock market is almost done. And then as we get into February, you want to pile on money. You want to pile on, because what's going to happen is when people get those tax returns, when people stabilize in their job market, and they go into 2024 with the outlook of, okay, I'm doing this, let's get to work, from basically February to June, they're just grinding it out. We're in full stride. We're in full season bloom, right? And then people are getting ready for their vacations after that. So you want to take advantage early of the stock market to reap most of the growth, most of the gains that's going to come between February and June, because that's when we're going to see the most growth. So you want to analyze your portfolios, and you want to understand what is going to do well, what parameters are you using in order to get the best bang for your buck, and understand that these companies will maintain profitability, right? So when you look at a Google, you see that they're getting leaner. Do they have more space to cut jobs, or are they as thin as they can possibly be? And how profitable will they be? Is it comparable to future years, or is it less than future years? These are the things that we look to understand, and these are the things that we look to focus on and implement into our daily stuff. What are people doing to create change? You saw Netflix just dropped a movie with Kevin Hart. They're probably doing movies with a whole bunch of other people, creating their own ecosystem of movies and things of that nature that's going to lessen the cost of buying things out, and essentially turn them into a movie theater and not just a subscription channel. So that's something that I'm now looking into, like, oh, okay, what does Netflix truly want to become? Is it a one-place shop? Is it a movie theater and a TV show? Is it a series run? Like, they are tapping into all spaces when it comes to digital entertainment, and I'm just loving the sound of that. It may even seem like a YouTube channel in at some point. So those are the things that I'm going to start to dig into and start to realize what does Netflix truly want to be? What is their 5 to 10 year plan? And how does that correlate with where I want to be in the next 5 to 10 years, right? So again, those are the things that I'm personally looking into, going to do my research on. And if I do decide to buy some Netflix, you'll obviously hear about it. So again, if you like this channel, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.